There is a right way and a wrong way to write off a trip to Hawaii. So if you were thinking, how can I actually write off a trip to Hawaii? We're going to break that down and so many other case studies coming up next. Welcome to Office Hours, a tax podcast by Fujikawa and Associates. And we're your hosts. I'm Josh Baldovino, one of Derek's clients, and this is Derek Fujikawa, and he's the managing partner of Fujikawa and Associates. Derek, how you doing today?
Good, thank you. How are you doing?
I'm good. Kids are about to be out of school. It
Yep.
is summer travel season, and we're going to talk about how you can actually write off travel for your business and or for your investing. Before we actually jump into that, Derek, are you going anywhere this summer?
We are, but we haven't made any plans yet. Our daughter just finished her 10th grade year, so we're going to start looking at colleges.
Okay.
Probably going to do probably drive down the coast and look at colleges along the coast and down in LA.
University of Hawaii is pretty fun.
Yeah, that'd be nice.
Okay,
Give us an excuse to go
so
there.
we're talking about tax travel. As a parent, you can't write off your visiting colleges for your kids, right?
No, I wish we could, but no, unfortunately not. That's a
Okay.
personal expense.
Gotcha. So this is what we're talking about today. It's basically what can you write off, what can't you write off, or what is the right way to go about it?
Yeah.
Because that's one of the most popular tax questions. I'm sure you get that question a lot all the time too. And
Yes.
so let's just dive right into it. Let's talk about
Sure.
driving hacks. Are there any driving tax hacks or car tips or things like that?
I don't know about hacks, but it's one of the things that a lot of people miss in business. You usually have to drive at least a little bit for business, right? But the biggest thing with driving is there's some record keeping that you need to do. So that usually trips up most people is if you don't keep good records, it could come back to bite you if you try and deduct that. So you need to keep track of your mileage, both your total miles and your business miles. That's the best thing to do is have either a travel log, old fashioned way was just to have a little clipboard or a little book and write it down. But now there's apps that'll track your mileage and you just hit the button when you're leaving and hit it when you get there. I know even myself, I sometimes forget to do that. So you have to really be diligent about it and make sure that you track everything. You can go back and input it in and just make sure that you have everything correctly. But if you don't do it for a couple of weeks, it can snowball and forget or things like that. So it's really is staying on top of that record keeping. And then there's two ways that you can deduct vehicle expenses. So the first one would be the standard mileage rate. It's the easiest. You just take your business miles, multiply it by the standard mileage rate that is put out by the IRS every year. 2022 was an odd year since gas went up so much. They actually had two different rates, one for the first half and one for the second half. But usually it's just one rate for the whole year. So it's easy. And it covers wear and tear, gas, insurance, everything. So it's not just the gas price. It's usually, I think it's 62 and a half cents for the last half of last year. 62 and a half cents a mile, 20 miles, that's what, $13 almost, $12.13 per, say, gallon of gas, right? So it's more than just the gas. Or you could take what's called the actual expenses. But in that case, then you would have to take your total business miles for the year, divide that by your total miles for the year. And then that percentage you can apply to all of your gas prices, your insurance, your maintenance, everything. You add all those costs up and then multiply it by that percentage, and that's your total cost. So most people opt for the mileage rate just because it's easy, but you can actually run both and see which one's bigger and then choose which one to use.
Have you ever done the comparison where, especially now that EVs are becoming more popular and it's cheaper per mile to drive an EV
Yeah.
than it is gas, assuming obviously that the car costs are equal, is the bigger savings in EVs?
I guess so. It really would just depend because you're going to get the same mileage rate. It doesn't
Yep.
matter if it's an EV or car. So you're going to get the same deduction. So it just
Mhm.
depend on what that gas price costs versus the electricity costs to run the car.
I'm guessing
So
if you're driving, say, like a big Ford F-150, not the EV version of it,
yeah,
and you're getting 12 miles a gallon versus then driving a Model 3.
yeah, that could make a big difference. But same thing, but just driving a more fuel efficient gas car would make a difference between that savings as well.
There. Okay, well, someone who's watching this right now, if you've ever done a Prius versus like Tesla Model 3 comparison, let us know in the comments. I'd be
Yeah.
curious. Okay, how about flying tax hacks or tax strategies? Anything on
So
flights?
flying. So the big thing with flying is wherever you're going obviously has to have a business purpose.
Okay.
And so the big question I ask is, can I deduct my vacation if I go do this little thing here, or spend a day doing something while I'm on vacation? So if the primary purpose of the travel is personal, then it's not deductible.
Okay.
So if you're going on a 2-week vacation and you're going to spend a day doing some business stuff, then that's not a business trip and it's not deductible. But if the primary reason for your travel is business and you do throw in some personal stuff in there, then you can deduct the business portion of everything of your travel.
So I hear the term like the sandwich method.
Yes.
Is that what you're referring to as maybe like the best way to go about it?
That's a way to get around that personal part. The sandwich method is traveling around a weekend, right? So you're sandwiching the weekend into your travel plan. So you go schedule some appointments on a Friday. You can either travel on Thursday or maybe Friday morning, schedule some appointments on Friday. You have the weekend where you can do your personal stuff. So weekend, since businesses technically, weekends are not business days, you can't do business on those days, or the IRS deems that you're not doing business on those days. So you can do personal stuff on those days, but they don't count towards that personal versus business days. And then schedule meetings on a Monday and then fly home either Monday night or Tuesday. And then now you have a business trip with some personal in between there, but you can deduct the whole trip because you have the 2 days scheduled for business use. And so you do have to pre-plan those. So you can't just get there and say, okay, I'm going to do some business here and here. You have to actually have appointments set up on those days ahead of time. And then you'll qualify for that business write-off for that trip.
So if you're looking for the way to get 2 free days,
Yeah.
that's the way to go about it. If you need an excuse, if you're visiting the Bay Area, maybe you need a tax consult with Derek or some marketing strategy with me.
Yeah.
We can
There you go.
reschedule an appointment.
Because on Friday and Monday and you're good. So yeah. The other thing though too is if you bring your family, obviously kids and spouse, if they're not part of your business, wouldn't be deductible. So it'd just be your portion. So if you have a business and your, say, husband and wife or both spouses are in the business, then you may be able to deduct that full expense there. But it would just be anyone that has a business reason to be there would be deductible.
Okay. Make sure your partner, if you're Airbnb investing, is maybe also managing your Airbnbs then, huh?
Yep. Yeah.
Okay. What about when we're talking about flying? Is there any, say I am going for business purpose, does flying coach versus flying business or first class, does that matter at all? Or if your business can properly afford it, then it's fair game.
So it has to be a reasonable, right? Flying first class depends, but most likely you'd be able to deduct the cost to fly there for a reasonable ticket fare. But if you're paying 3-4 times the amount of a regular coach fare, you'd probably have to bring that down to a kind of a reasonable amount.
So as long as you can justify it, if maybe there's a significant time savings, or if that was the only flight available, but there has
Maybe,
to be
yeah. If that was the only flight, yeah. If you had to be there at a certain time and that was the only flight available, you might be able to deduct the full amount.
How about switching gears then, flying a little bit farther? So we're going US-based travel versus international travel. How does that differ tax-wise?
So international travel, so the IRS was going to look at that a lot more closely, right? Because that's going to be, most businesses aren't going to have a normal business reason to go out of the country, right? So they're going to want to know why you're going out there, and you have to really show the business reason for flying out of the country. The IRS doesn't want people taking their Italian vacations and trying to deduct those as business expenses. There has to be a definite business purpose to the flight, obviously, and in any travel, but the standards are going to be a little bit tougher on that. In order to deduct the cost, it has to be primarily for business purposes.
Okay.
So essentially more than half of your time needs to be spent on business versus personal. And in that case, then if it was all business, you can deduct the full amount. But if it's business and personal, then you're going to have to allocate the cost based on the number of days or the percentage of time spent on business versus personal. And then if that personal ends up exceeding more than half, then it becomes just a personal trip. And the travel is non-deductible. Any direct expenses relating to the business would be deductible, but all the travel, the airfare and everything would not be deductible as business expense.
Seems like all tax questions just go back to documentation.
Yes. Yes. Yeah.
And then obviously you're just now keeping track of how much on one side or the other.
Yes. Yeah. So
Uh,
again, documentation is key with a lot of this.
okay, well, you put here in the notes cruises. So how
Yes.
can I write off a cruise? Is the question.
So that's something like even like with CPAs, we'll see like you can go on a convention or like a continuing education class on a cruise. Anyone can do it, but is it deductible? I guess is the question. So there are some limitations on that. So it has to have to be a definite business purpose, right? It has to be something that you need to do for a business. So like for CPA, that could be getting our continuing education because we do need that every year. But there are some other restrictions. It does have to be the ship has to be registered in the United States and its port of call has to be in the United States.
Gosh, that makes it really tough for most
Yeah.
popular cruise lines then.
So you can't go to a Mediterranean cruise or whatever. It has to be registered in the US, port of call in the US. And then there are some other restrictions on your return. You have to actually disclose a bunch of things. If you're thinking
Not
about
that easy.
yeah, if you're thinking about something like that, make sure you have all the information and make sure that don't take the cruise liner or the conference's word on it being deductible. You want to do your research and make sure that it meets the qualifications.
Okay. How about this? Business masterminds, which is basically hopefully you have friends that are doing business with you or in the same industry, because that
Mm-hmm.
makes some of these a little bit easier because you
Mm-hmm.
can plan conferences, events, or masterminds around it. And I'm
Yeah.
guessing, how could I properly plan a mastermind and say, rent some really cool Airbnb in Yosemite and be able to write off some of that?
So there would have to be a definite business purpose for the attendees. For you, that would be your business, right? Or if you're putting it on, then you can deduct all the costs and you would get the income coming in from it and all the costs. But the attendees coming, there would have to be a business. So if they're not already in real estate, they're just trying to figure out if they want to get into it, it probably wouldn't qualify because it's not, there's no definite business purpose to it. Say you're like the two of us were already in the real estate business and we're just looking to expand it and looking to get more information on how to run things better or just get more and share ideas with others, then that could fall into that necessary category for your business.
So if I'm planning the event, I'm just making sure that I have adequate speakers and an agenda is lined up that can justify an education expense. And then if you are vetting someone's mastermind, just make sure that there is an agenda or
Yeah.
something
Yeah.
on the education
Yeah, if you're
side.
just going to hang out with some people and talk, then that's probably more of a, even though you may be talking business the entire time, if there's no structure to it and it's just going and hanging out and talking, it's probably not going to qualify as a business expense. But if it's a structured, yeah, it's something where you have speakers, you have a set agenda, and there's specific topics that are going to be discussed, then that would most likely qualify.
Okay. So if you're listening to this and you want to host a midterm, short-term rental mastermind summer with a small group of operators, you might have two already that can come.
Yep.
Or if you want to do one on marketing too, I've been thinking about that. So that could be fun.
Yeah.
But I think just in general, right? Like all these ideas are really fun, and having the conversations with your CPA, in this case, I asked you, Derek,
Yeah.
but regardless of whoever your CPA is, you should be asking him these questions beforehand just to
Yes.
make sure you're either doing the right things, documenting the right way, and that way everyone's all on the clear. So when it comes to tax time or audit time, I'm guessing no one has any surprises.
Yes. Yeah.
Okay, one last
Biggest thing.
question for you.
Okay. Go ahead.
What has been the craziest trip that you've seen someone try to write off or has written off? Or, I mean, even a story that you've heard of with your own CPA group?
Yeah, the biggest thing is probably like a trip to Hawaii. I've had, so I won't name any names, but someone has
Mhm.
asked me if they could write off their entire trip to Hawaii if they go there and spend a day looking at property or spend a day looking at a business or a property. And I don't know if they actually tried to do it, but I advise them not to because again, like we just mentioned, it's primarily a personal trip. So then in that case, it's
Gotcha.
not deductible.
Okay, but what
So
if Brandon Turner just hosted his real estate conference there? If I attended his conference, then
mhm.
that can make it a write-off.
You could work it, yeah. Again, if his conference was say 4 days and you spent 3 more days there, then yes, you could work it in. But then if you spend another 2 weeks there, then you're looking at more of a personal trip still, even though you went to the conference. You could deduct the cost of the conference and the cost of your hotel while you were there, but most of the other travel expenses wouldn't be deductible.
Okay, so as long as most things are confined within, hopefully, man, you should make a conference where it's sandwich and then gives you a 2-day break.
Maybe, yeah.
That'd be interesting. Anyways, I guess I need to go ask my wife now for permission for Brandon
Yeah.
Turner's next
Or you
conference in July.
go to a conference on Wednesday, Thursday, Friday, and then schedule a meeting on Monday somewhere else. And then you got your business. Then you got what, 6 days there.
Oh,
You got
see,
that weekend in there sandwiched in where you can do your personal stuff.
then that's it. That's okay. That's the pro tip then is do the education thing, go tour some houses on the following Monday, and then fly
Yeah,
out of there.
yeah.
I like it. Derek, thanks so much. Hopefully, if you are listening to this, has helped demystify what's allowed, what's not allowed, what's
Mhm.
the right way to do it. And ultimately, if you have any questions, you should just be asking your CPA or a CPA like
Mhm.
Derek. So, all good fun. If you want to connect with Derek, you can connect with him with the links all down below. So
Mhm.
that's there. Derek, thanks so much for kind of demystifying the process.
Sure.
Really helpful.
Yep. Thanks. Yeah. And for anyone out there, if you are thinking of traveling for business, just ask the questions first versus just doing it and then hoping that it's deductible, because you may still go anyways, but having that information ahead of time is always useful.
Yeah, that could change where you end up booking your restaurant reservations.
Yes. Yeah.
Sweet. Well, thanks so much, Derek, and we will see you all on the next one.
All right.
Bye, everyone.